Okay guys, let's go ahead and take a look at the slides for Chapter 6. And what we're going to get into now is a further discussion of our internal control here in Chapter 6. And we've already started this discussion to a certain extent when we talked about the obtaining the understanding phase and how the auditor will make assessments of control risk in the preliminary phases of the audit. And we're now going to go further with that discussion and start to understand more about documenting that understanding and then doing testing of the operating effectiveness of those internal controls to determine the timing, extent, and nature of our audit procedures. So, just to make sure we're clear on the responsibilities for internal control, we can see that management has the responsibility to maintain the internal control. And they really have two objectives that the auditor is concerned with, primarily our financial statement auditor is concerned with making sure that assets are being safeguarded and that we are obviously generating reliable financial information. Always going to be two key things that the auditor is concerned that management has exercised their responsibility to achieve these objectives. Now, of course, the auditor is going to look at the internal controls and they're going to want to make sure that they are designing the test of controls if we decide to test the internal controls. And of course, we always have to design our substantive procedure. And remember, we said we're always going to obtain an understanding of the internal control, and then we will use that understanding to assess the risk of material misstatement. And then that assessment of the risk of material misstatement will determine whether or not we're going to test key phrase operating effectiveness of the internal controls, or are we going to take a purely substantive approach and go directly to our substantive testing. If this sounds familiar, these are some things that we talked about in some of the earlier chapters. Now, when we look at the internal control, we know that management has different objectives that they design their controls around. And this is a framework that was come up with this committee of sponsoring organizations of the Treadway Commission some years ago, and they have recently updated this. And this is just a way of structuring internal controls or looking at internal controls, establishing a framework that will help the auditor to assess that the controls are meeting these objectives. And you can see that we have effectiveness and efficiency of operations, compliance with laws and regulations. Auditors may be somewhat concerned with those, but the auditor's primary concern here is going to be that the controls, and I'm just going to use a different color for that because that's our main objective, is ensuring reliability of financial reporting and also a little bit of safeguarding of assets. But definitely that reliability of financial reporting, because if they've established those controls, the auditors can rely on those controls to a certain extent and alter the timing, extent, and nature of our substantive procedures accordingly if we can rely on those controls. So again, and we said this on the previous slide, the auditor is primarily concerned with the nature of the controls related to financial reporting. That doesn't mean that we ignore the controls related to the other objectives, the compliance with laws and regulations, effectiveness and efficiency of operations, but those are secondary to our primary consideration of the internal controls related to financial reporting, and as we mentioned, safeguarding of assets. So you see here that we, of course, want to make sure that the entity is, in compliance with laws and regulations, or at least there's an expectation. Remember, we said that we will identify misstatements for those that are directly related to financial statements, and so we would have some interest in those. But again, our key interest being the reliability in financial reporting of objectives. Okay, and again, this is the COSO structure, and what COSO did is they said, okay, if those are the objectives of the entity, then we want to structure the control around those objectives. So what COSO pointed out to us is what a company should do is they should structure their controls around having a strong control environment to achieve those objectives, to assess risks that could affect the accomplishment of those objectives. Then what? Then we will go ahead and put control activities into place that will help us to accomplish the objectives. We will then inform individuals as to their responsibilities to carry out those control activities. And then, of course, we will monitor those activities to see that they are achieving those objectives. And once we do, that information will feed back into key management, senior management, board of directors. They should then assess how the risks are affecting their ability to meet the objectives, financial reporting. They will establish control activities, etc. So this really does work in a circular process, although I'm not sure that this diagram has shown it in the correct order. But this really is a process that you can think of as 1, starts at the top, then what? 2, assess the risk. 3, put the control activities in place. 4, form individuals their responsibility. 5, monitoring back to 1. Okay, this is really the process that this should be displayed as. So if you take a look, we start to give you some information about different of these. And control environment, really, guys, is the most pervasive of the controls, and that it or the control components, I should say, and that it touches all the other areas. So you could just put most pervasive in here, most pervasive part. It really touches all the other parts. If you don't have a good control environment, none of the other 4 components are going to be as effective. Okay, so most pervasive is going to be our control environment, and you can see if you take a look, our control environment really sets the tone at the top. Okay, sets the tone at the top, and it really is making sure that individuals understand the importance of internal control and achieving the entity's objectives. Okay, then the entity will do a risk assessment process. Now, it's important to know that this is not the same as the auditor's risk assessment, as the auditor's assessment of risk of material misstatement. This is the entity looking at various factors that will affect their ability to achieve the entity's objectives, including making sure that we have the reliability in financial reporting. So this is what the entity does. They are to do that. And then once they have identified those, they are to communicate. Actually, this is out of order too, in the way COSO contemplated it, the way they've listed this here. I don't know why they listed it like this. Okay, let's just number these correctly. Control environment comes first. Okay, control environment comes first, then risk assessment, then control activities. I don't know why they put control activities before the information communication or after it, because then we put the control activities in place, and then we communicate to individuals their responsibility for carrying out the controls. So control activities are performed at all levels of the organization, and we communicate to all levels of the organization their responsibilities, and then we monitor. Okay, so control information communication is going to be 4 here. And then we monitor, number 5, we monitor that they are achieving the control objectives there. And now, for some reason, I've lost my numbering because I went back to the slide there. There you go. And number 5 here is the last part, is going to be the monitoring. And really, what I want to put in here is our internal audit staff. Okay, internal audit staff is key to this monitoring. Okay, the internal audit staff really are the ones going to be monitoring, and they should be communicating weaknesses to senior management, so that again that information gets back up into the top part, tone at the top of the organization, gets back in. They can then see how the findings affect the risk and impede the entity's ability to achieve their objectives. Information communication goes out. We're establishing these new procedures because of some issues that we saw with monitoring, or because other issues that are emerging that are going to affect our ability for financial reporting, reliability. Here's the new control activities that will be put in place. New control activities will be in place, information communication about that, and then again we continue our monitoring. Okay, so let's just go over to the next slide here, and this was really something that COSO put together, and you can see that we have our objectives going across the top here, and reliability financial reporting being the key one that we're interested in. And the COSO model here, now because COSO came up with this graphic, they got it in the right order in the way COSO contemplated it. and that you have your control environment on the top, risk assessment, put control activities in place to address those risks, communicate to individuals their responsibilities related to these control activities, and then monitor and feed that back up to the top. And notice that it goes at all levels of the organization that we're doing this work. So COSO came up with this graphic. It's been around for some time. It's a good way of depicting the way an auditor can look at the internal controls. Okay. Now, when we think about the internal controls, and we think about them in a manual environment, but these days, of course, highly automated environments are fairly common. Okay. And so when you have a highly automated environment, which you almost always will these days, you're going to have some benefits, but you're also going to have some risks. Okay. Benefits: ability to process large amounts of data. Greater timeliness and reliability of information. Okay, greater ability to prevent circumvention of controls. Enhanced segregation of duties. Okay, we're going to talk about segregation of duties later, and we're trying to segregate the authorization of a transaction with the record keeping and the custody of that asset. Well, custody of an asset is an easy one for computers. Computers don't order stereo equipment for themselves over the internet and take it home. Okay, and so you can have, with a computerized system, automated ordering processes, etc., because we don't have concern about what you do with human beings, if there's going to be some sort of manipulation of the records and stealing of the assets. So a little bit of the enhanced segregation of duties. Some risk: if there's an error in the logic of a software, of a program, instead of there being one error, every single transaction is affected by that error. Unauthorized access to data. Now someone can hack in from overseas into our data, as opposed to having to come physically to our premises to inappropriately obtain data from our systems. So some disadvantages as well. Potential loss of data. If there's an issue, I was on an assignment once where some data was corrupted at a major credit union that we were looking at because they ran their backup and their maintenance on their computer systems at the same time. Somebody trying to go home early on the weekend tried to run both of those simultaneously, and they corrupted their data, caused major outages at several credit unions. This particular one that we were looking at was a corporate credit union that disseminated data out to several other credit unions, and it affected all of them because of inappropriate procedures, and there was a loss of data as a result of that. So that's something that needs to be considered, and of course the proper operating procedures would avoid something like that. Now, when we look at our 5 components, remember we have 5 components: our control environment, we're going to do our risk assessment, and then we're going to put our control activities into place, we're going to communicate those responsibilities, and then we're going to monitor. That's our 5 components. And then there are 17 principles under these 5 components. Not 17 for each, 17 total falling within the 5 components. So we're not going to necessarily read through every single one of these, but let's just see some of these, and we can see that the control environment, we've already said, is the most pervasive. And so what's going to happen, we're going to see involvement at the highest levels of the organization. So we're looking for the board of directors to demonstrate their independence from management, right? Very high level issues that we're talking about here. Management is going to establish the appropriate oversight for the board, structures, reporting lines. We have an expectation, for example, that our internal auditors should be reporting directly to the board of directors, right? And we talked about that a little bit earlier. We're going to obviously retain competent individuals in alignment with the entity's objectives. Okay. Now, just going over to the next slide now and seeing our next component, which is the entity's risk assessment. And when the entity is doing risk assessment, they are looking to see what are external events, circumstances, or internal that could affect the entity's ability to achieve their objectives of accuracy, reliability, and financial reporting. Remember guys, we're always concerned about what? Those financial statement assertions, right? We consider our financial statements made up of those assertions, and we're going to see that when we look at the internal control, it always is in relation to those assertions, and we've actually kind of started to look at this a little bit earlier. But we're looking at factors like new technology, rapid growth of the company, international growth, right? New accounting pronouncements, right? As requirements change in the accounting pronouncements, we have to make sure that we have the appropriate internal control financial reporting processes that will allow for reliability in compliance with any new accounting principles. All of these things are things that the entity should be looking at as risks to their objectives. They need to assess those risks, and then they need to respond to those. So just going over and taking a look a little bit more about the entity's risk assessment process. And of course, in that risk assessment process, just like the auditor considers the risk for material misstatement, whether caused by error or fraud, the organization needs to consider the potential for fraud affecting their ability to achieve their objectives, primarily financial reporting. But of course, misappropriation of assets being one of the type of fraud risk that we could be concerned about. We would be also looking for, internal controls that help protect assets from misappropriation, right? Okay, so taking a look at the next slide now, looking at control activities, and of course we have various things that we can be doing. Physical controls, right? We talked about the need to make sure that we're safeguarding our assets, right? And so physical controls, and the auditor would also be concerned about physical controls, seeing that things are locked. I'm sure you've all seen the cables on computers, those sort of things. One of the things that I like to do when I go to a new audit client is I will use my visitor card key to see if it opens the computer area of the agency. If we can go into where only authorized personnel should be able to go in, and sometimes we'll wave the car key, and if the visitor card opens and accesses the secured computer areas, you know that you have an instant finding there in terms of the physical controls. Also, important physical control, periodically reconciling the physical records to the records to the actual physical inventory. We mentioned this before. If management never does that, then what's going to happen? Those assets are going to go for a walk, and they're never going to come back to the company because the employees will know that there is an appropriate inventory being taken of those things. So that sort of thing needs to be done as well. Okay, obvious segregation of duties. Again, segregating the authorization, record keeping, and custody. Okay, we're going to see in some of our later chapters when we start talking about the particular auditing for particular line items in the financial statements, and we do our internal control evaluation, we'll always be talking about different departments. Okay, when you look at those departments, it gets a little confusing to remember which department is responsible for which activity, and you always look at the departments as either being an authorization department, a record-keeping department, or a custody department. And when you look at them that way, and I'll be pointing that out to you as we go through these chapters, then it's a little bit easier for you to pick out the appropriate function when you start looking at homework, quiz, and then eventually our second midterm questions related to the segregation of duties. You're going to see that it's always either an authorization department, record-keeping department, or custody department. For example, our purchasing department is considered an authorization department. So they'll say which of the following would be performed by the purchasing department. The correct answer to questions like that is always the one that is the clear authorization function. And that will come a little clearer when we start to go through that discussion in some of the later chapters when we get into the specifics regarding the individual accounts as we go through and look at the internal controls associated with those. And of course, we'll look at substantive procedures associated with those as well. Okay, information communication then comes next, which we have the control activities, and you can see here that we're going to identify and record the transactions is one of the key things we want to do. Okay, and let's see if I can just click us back now to to what I wanted to look at there. I guess I need to be on the pen and highlight the pen here, get the highlighter. And so taking a look, we want to identify and record all transactions, classify transactions properly, right? And then we want to make sure that we have properly communicated the responsibility for internal control to all of the employees, etc. So both making sure that our information systems are gathering the data, but then making sure that we're communicating responsibilities of individuals in internal control appropriately. Okay, and then you get to monitoring it again. They don't even mention the internal audit function here, but that really is the key monitoring mechanism that we would look for, is going to be our internal audit function. Okay. Okay, good. So we would look at that internal audit function. Just want to put that on there so that you remember that's a key part of monitoring. Okay, so let's take a look at a couple of questions, and you'll see some of these same ones in your homework, but you should also go through your homework and your quiz files to see some additional ones. I didn't put them all here, but I put quite a few, but also make sure you get into Connect, and I see that most of you are doing that. And again, you just need to attempt the questions in order to get the points for that. I'm not giving a lot of points for homework, but you should go in, take a look at all of those. And some of those will be very familiar because I've embedded them here. Okay? But internal control is a process designed to provide reasonable assurance regarding the achievement of which objective. And notice we have the efficiency of operations, reliability, financial reporting, which of course is our favorite, but also compliance with laws. So all of these are what we saw on the COSO model as we were going through and looking at that. Okay, monitoring is a major component of the COSO internal control integrated framework. Which of the following is not correct? And let's look at these. Monitoring and other work conducted by the internal audit staff, that is a key part of the monitoring. Monitoring can be an ongoing process. It should be an ongoing process. Remember, it's a circle, and then we're going to come back around and we're going to continue to monitor as we make the control environment aware of what's going on, put the control procedure in place, communicate, and then continue to monitor. Okay, monitoring can be conducted as a separate evaluation. I guess I'm not even sure what that means, to be honest with you. But what the key thing is, the independent auditor, okay, cannot serve as part of the control environment. That would be a imperance to our independence. We cannot be involved with that. And I mentioned before that there used to be firms that used to try to get away with saying, well, we'll be the internal auditors, and then we'll also be the independent auditors. And Sarbanes-Oxley said no to that, and that impairs our independence. So no, we are not part of the control environment. We evaluate the control environment as part of our audit, but we are not part of the control environment. That's a no-no. Okay, guys, sorry, I wanted to, if you're wondering what was going on there, I wanted to add a couple slides there that I had forgotten about until I saw this slide come up, which is our audit risk model that we talked about. I think it was back in chapter 4, and of course we said back then that we have our audit risk model, in which we have our audit risk, and our audit risk is equal to our IR times our CR times our DR. We're going to be talking about what procedures the auditor will do here to assess that control risk, including then that could include the testing of the operating effectiveness. So the couple slides that I wanted to add from our previous chapter was this one here. I'm sure you fondly remember, right, in which we sit here and we have our risk of material misstatement, but we know that our risk of material misstatement is comprised of our IR times our CR, and then if we assess the risk of material misstatement at the maximum in order to keep our audit risk at low, we're going to have to do what? We're going to have to keep our detection risk lower, which will then bring up the extent, nature, and timing of our substantive procedure, right? And then we said that if the auditor had made the assessment risk and material misstatement at less than the maximum, say because in this example, remember we lowered our control risk, and we're going to be talking about again how the auditor would make that assessment here in this chapter, including in this case you would have to test operating effectiveness if you had operating effectiveness to assess the risk of material misstatement less than the maximum, but that then allowed us to bring up a little higher, remember I said don't call it high detection risk, but a little higher detection risk, and the way we do that, we could then accept a lower level of substantive testing, nature, extent, timing, doing what? Doing a less effective procedure like using internal evidence instead of external evidence, extent, smaller sample sizes for our substantive testing, timing, doing a little more interim testing versus year-end testing, okay? So you come over and remember we said that we always have to do the risk assessment procedures, and this is when we're obtaining an understanding of the entity, including the internal control, right? And when we look at the internal control, keywords, we consider the design, consider that those controls have been implemented, and based on that, we make an assessment of the risk of material misstatement, and that's the interaction of our RR and our CR. We're talking now about how the auditor will consider the control risk here. And if we assess the risk of material misstatement at the maximum, we're going to follow the red arrow over to the next page and go directly to our substantive testing. If we assess the risk of material misstatement at less than the maximum, we're going to follow the black arrow. And when we do that, we now see that we will test, key phrase, test the operating effectiveness of the controls. And remember, when we test the operating effectiveness, that's because we have assessed the risk of material misstatement at less than the maximum. When we obtained understanding, we saw some controls that we thought would be effective in preventing or detecting a material misstatement, and so we went ahead and we would then test the operating effectiveness of the controls, and then that would allow us to determine the timing, extent, and nature of our substantive procedures. We always have to do some amount of substantive procedure, even if we had followed the red arrow and assessed the risk of material misstatement at the maximum. We would still have to do some amount of substantive testing. And again, we saw this on previous slides. Now, here, the text gives us really a more detailed step-by-step analysis of what the auditor would be doing here, but it really comes down to what I put on those couple of slides that we looked at back in Chapter 4. Okay? Now, the auditor could take a substantive strategy, and these first couple are really sitting here saying we're not going to rely on the controls. That's what that big pink no means here. We're not going to rely on the controls. We're going to go directly to our substantive testing because we don't think the controls are effective or properly designed. Okay, we didn't like the design. We didn't see that they were implemented. Okay, but what we didn't talk about over there when we were deciding that we were going to not test the operating effectiveness of controls is if the auditor has determined that it is more efficient to go directly to substantive testing. This is something that the standards allow for us, and the reason they do this is they're saying, well, we're not going to force an auditor to test the operating effectiveness controls if it's more efficient for them to go directly to substantive testing. Now, I look at this and it sounds good, but the actuality that could occur is questionable. Why? If we have looked at the controls, and we always have to look at the design of the controls, determine that they've been implemented, we look at controls, we think they have the potential to have operating effectiveness, then we could move to control testing, and we would be using more internal evidence, obviously for the internal control testing, and if those had supported a lower assessed level of control risk through our testing of the operating effectiveness, now we can use internal data for our substantive testing, do some testing at interim, and have smaller sizes for our substantive test. If we just bypass the testing of the operating effectiveness controls that had a potential to be effective, and we just decided not to test them, now what's going to happen? Now we're going to have to use external evidence, and we're going to have to be hounding down our clients' customers for external confirmation, that sort of thing. Extent, larger sample sizes for our substantive testing. timing. Now we're having to do year-end testing when our staff are busy wrapping up the last parts of several audits for several clients that we may have. So the chances that you would be able to move directly to substantive testing and how that be more efficient, it's questionable. But if you run into an audit that does that, the standards do allow for us to go directly to our substantive testing. Okay? Now, usually, if an auditor goes through that step one, the way I've defined it, which is obtaining the understanding of the controls, evaluating the design, determining that they've been implemented, then, and we always have to do that, then the auditor may decide to rely on those controls. And if that's the case, then we're going to always have to assess our control risk. So this, I don't even know why they have this yes here. We always have to obtain an understanding, assess control risk, and if we decide to rely on the controls, then we would have to test the operating effectiveness of the controls. Okay? And when we test the operating effectiveness of the controls, we really are going to line up control activities with assertions. And remember our 5 primary assertions here, 6 primary assertions that we talked about in our earlier chapters. Okay? And remember that when we do this, we identify the potential misstatements. We then evaluate the controls that would help prevent or detect that misstatement, and then we use that understanding to help design the timing, extent, and nature of our further audit procedures, which could include a testing of the operating effectiveness of the controls and will always involve some amount of substantive testing. And remember, I laid this out in another chapter where we sat here and we were talking about the sales accounts receivable, right? But then we looked at the occurrence assertion, we thought about the potential misstatement, we lined up the control activity, we then looked at the controls and made assessment of our risk and material misstatement. And in this case, I remember we said we didn't like the design, we didn't think it was implemented, so we bypassed the testing of operating effectiveness and went straight to our substantive procedures. In the other example, we liked the design and the implementation of the controls, so we had to do what? Test operating effectiveness of the controls. That's what we did here. And then we went ahead and did our substantive procedures. Always have to do substantive procedures. But remember, everything flowed from the assertions, and then we thought about the potential mistake, tried to find controls that would prevent or detect that, evaluated them, determined whether we were going to take a purely substantive approach, or take the approach of testing the operating effectiveness first, and then doing our substantive procedures from there. Okay, and we talked about that last time, or in another chapter. Now, we do have to document our understanding. That's part of that step one. So obtain an understanding sufficient to evaluate the design of the controls, determine that they have been implemented, make an assessment of the risk and material misstatement. Always have to do that, and we have to document it. And you can see there are different ways of documenting that. These days, companies know that the auditors are going to walk in and ask for all this, so sometimes they'll just go ahead and put together documentation for us, which of course we would verify, that will help us to document our understanding. We could use internal control questionnaires, flow charts, narrative. If you have a complicated system, not as complicated, you could use a narrative description. I was on audits before where we used narrative for very complicated systems. We used to call them cycle memos, and I used to call them cycle memos because people would write 300 pages, and it'd be like, well, can you get this down to a couple page flow chart? Okay, but if it's a less complicated system, okay, then a narrative description is fine. You could also use internal control questionnaires. So let's just look at a couple examples of those, how we document our understanding. And I think you've seen these flowcharting symbols, although some of these are getting a little, I guess if we're dealing with the federal government, they may be still using punch tape. I don't know. But most of these are I guess fairly. I read somewhere that the federal government is still using the 5 3/8 or 7/8 size, or 7 3/8 size discs in some cases. So a lot of these are sort of obsolete. But you can see some of the typical flowcharting symbols that we would use to document our understanding. Internal control questionnaire, you can see here, yes is good, no is bad. Okay, so you're just going to be asking a series of questions about whether or not the client has certain controls, and you're looking for yeses to those. If you see a no, that indicates a weakness in the internal control, and there'd be an expectation that we would have looked for a compensating control on that, or done some substantive testing to the maximum extent to address that weakness in the internal control. Okay, so as part of getting an initial understanding of the internal control, the auditor is required to do all the following except obtain knowledge about the operating effectiveness. That is not done in the attaining understanding phase. Key phrase, remember we said what? Testing of operating effectiveness is done in our further audit procedures after we have obtained the understanding and made our assessment of the risk and material misstatements. So that's why I point to that phrase over and over again. The questions clearly expect it's clearly expected that the auditor will have a clear understanding of the two differences between those two phases, one obtaining the understanding, the other testing the operating effectiveness. Okay, coming over, assessing control risk at a lower level most likely would involve identifying specific internal controls relevant to specific assertions. Remember, guys, everything flows from those assertions. Think of the potential misstatement. Think of the control that will prevent or detect that material misstatement. That'll allow you to make the assessment of your risk and material misstatement. Then you go from there. Am I going to test operating effectiveness, or am I going to go directly to substantive testing? I always have to do some level of substantive testing, though we know that. Okay. The documentation of the auditor's understanding, have to do that. We can use narratives, questionnaires, flowcharts, combination of those. We saw that. Okay. And a flowchart is used what? To diagram our understanding of the system. Got to document our understanding of the system. Flowchart is an acceptable method. Okay. Kind of a common sense here and kind of a cute slide, I guess, and that the level of controls vary by the size, right? Larger company, we would expect more sophisticated controls, more enhanced segregation of duties. Smaller entity, not so much. I audited a small child care center one time, House of Representatives child care center, and the nurse was the bookkeeper, which led to other issues, but we didn't expect as much segregation of duty for, it was basically a two-person shop. You had the director and you had the nurse / accountant. So, the more sophisticated the entity, the more sophisticated controls. The smaller the entity, not so much. Okay. Of course, there are always limitations of the internal control. Human management, management override. Obviously, a dominating management. Remember, that was a fraud consideration. Human errors or mistakes. Collusion. Two or more employees somehow circumventing the controls could be a weakness of the internal control. A limitation of the internal control. Remember, when we are getting the evidence to support our internal controls, when we started control testing, we had a hierarchy as to the nature of the test of those controls. And so we had at the top of the food chain reperforming, observation coming next, right? So this is a hierarchy. Inspection, inquiry being the least reliable. Let me put my little brackets over here. These two being what? Direct personal knowledge. Remember we said that's the best, okay? But of that direct personal knowledge, the best is going to be reperformance for our internal control testing, okay? But if you're sitting there and you observe something, that's also direct personal knowledge, right? This is direct personal knowledge, believe it or not. Inspection, okay, is not auditor's direct personal knowledge, but it could be looking at documents, looking for signatures. Remember, we had those inventory control sheets in the jewelry shop that I was talking about before. That could be inspection. Inquiry, least reliable. You can rely on it to a certain extent, but you would have to combine it with some of these other things that we're seeing higher on this chart. Now, what's important about this chart to remember, we're going to talk about audit sampling in the next chapter, but the lower the assessment of your control risk, you're going to see that we're going to need larger sample sizes. We're going to learn that in the next chapter. And you're going to be looking for more reperformance type of control tests, more observation type of control tests, less inquiry. So the lower you try to get that control risk, you're going to go from the maximum, from the, say, moderate control risk to low. Say from moderate to low, if you had maximum, you wouldn't test the operating effectiveness. But once you get below the maximum and you think, well, I want to have, instead of a moderate control risk, I want to go to a low control risk expectation, larger sample sizes for your control testing, and an expectation that you'll have more reperformance and less inquiry. Okay, so this is really a hierarchy, and let's take a look at a couple questions from your homework on that. Which of the following audit techniques would most likely provide an auditor with the most assurance? Again, there's our favorite key phrase now, operating effectiveness, talking about that we're doing control testing now, was what we saw in those previous slides, the nature of control test. Reperformance is the best, right? Reperformance is the top of the food chain. Even though they kind of stuck it down here in the lowest rung here, it's the correct answer in that it is the most persuasive, gives us the most assurance. Okay. Our primary consideration regarding an entity's internal control is whether they, obviously, we do everything around the assertions. Everything we do is around those assertions, right? Okay. Coming over, after obtaining an understanding of the entity's internal control system, an auditor may set control risk at high for some assertions because he or she believes the controls are unlikely to be effective. That was sort of that first example on that little chart that we had where we went straight to our substantive testing if we don't believe the controls are effective for that particular assertion. Again, we do everything by the assertions. Okay, regardless of the assessed level control risk, we will always do what? Some substantive procedure, right? We've said that enough times now. I don't think you'll ever forget that or miss that question. Okay, so let's go ahead and take a look at this next slide and talk about using interim versus year-end testing. Remember, we've said several times that we can use the interim testing if, of course, we have assessed our risk and material statement at less than the maximum. We would use a year-end approach if we had assessed the risk and material statement at more than the maximum. And we're going to see that we will always do some amount of year-end testing. And so let's just go ahead and take a look at this example here where you can see that we have a 12/15 reporting date, or 12/31/15 I should say, reporting date. And if we're doing testing at interim, we are doing testing at a period before the end of the year, at interim dates before the end of the year. And again, we can do some of this interim testing, and we can sit there and do that. If we assess the risk and material misstatement at less than the maximum, we would do the bulk of our testing during that time. If we had assessed the risk and material misstatement at maximum, the bulk of our testing would be at year end, although it doesn't preclude us from doing some interim testing. We probably would still do some interim testing, but we're going to have to make sure that we're doing sufficient testing at year end if we had assessed the risk and material misstatement at the maximum. If we assess the risk and material misstatement at less than the maximum, then we could do more interim testing. But we will always have to do something to satisfy ourselves, and we would do some testing from our last interim date testing to the end of the year. They call that a roll forward period, and that roll forward period is just making sure that nothing has gone wrong during the period from when we did the bulk of our testing at interim to year end. And then, of course, there's always after year end procedures before we end up issuing our report, our wrap up of doing our final set of analytical review procedures, etc. And we'll talk more about some of these procedures as we get into some of our later chapters. But again, interim testing and the question versus year-end testing. Question is, how much of those do we do? We're going to do more interim testing if we had assessed the risk and material misstatement at less than the maximum. If you assess the risk and material misstatement at the maximum, we're going to see that we're going to be doing more of our testing at a year-end date. Okay, so you take a look and they give us a sense of the types of tests that could be conducted at interim versus at year-end, or they don't say versus year-end here, but they show us the nature of things that we would be doing in interim. Notice, guys, that that's both for test of controls and substantive procedures. So both of these can be done at interim dates, and again, the quantity, the amount of audit evidence that we get at these dates is going to be predicated on our assessment of the risk and material misstatement. But we can do interim and for both our control testing and our substantive procedures. Okay, so let's take a look and think about service organizations here for a second, and how we will have a service organization auditor that'll come in and take a look at the entity that is providing a service to our client, and that auditor's report will be useful for us in meeting our requirements for our internal control, which, remember, is to obtain an understanding of the controls sufficient to evaluate the design of the control, determine that they have been implemented, and then make an assessment of our risk and material misstatement. And we have to do that on every audit, and then if the assessment of risk and material misstatement is less than the maximum, we can go ahead and test the operating effectiveness of those controls. Well, what happens if an important part of our client's procedures are done outside the company by a service organization? Classic example here is ADP doing work with the payroll for probably many of your clients. In fact, your own employer may use ADP. They're that big. ADP is so big now that they actually try to put out information ahead of the release on employment reports. So they actually get out in front of the Bureau of Labor Statistics on what's happening with jobs because of the amount of payroll that they process at any period of time. They tend to be pretty close, hit the mark pretty close to what ends up coming up from the federal government about joblessness and the job rates, etc., and unemployment rates. So ADP is huge. So you're likely to eventually at some point run into a client that has their payroll processed at ADP. What happens? ADP doesn't want to be there entertaining auditors all day long, knocking at the door saying, hey, we need to look at your processes because we're have a client who uses your services. Instead, what ADP does is they have a service auditor come in. The service auditor looks at their systems, issues a letter that then is used by the user auditor. When they get those letters, now I'm not talking specifically about ADP here, there are two types of letters that could be obtained. There's a type 1 report and a type 2 report. Okay? With the type 1 report, all the service auditor did was come in and do the minimum, obtain an understanding of the controls, evaluate the design, look to see that the controls have been implemented, and they issue the type 1 service auditor report. User auditor takes that, puts that in their work papers, and that only covers us for step 1 of our requirement for the internal control that we have to do on every audit. That is to obtain an understanding sufficient to evaluate the design, see that the controls have been implemented, or understand if the controls were implemented or not, and then make our assessment of risk and material misstatement. So if you get a type 1 report, that'll get you through the design part of the work, but you would have to basically do the full measure of your substantive testing, nature, extent, timing, nature, using external evidence instead of internal evidence, extent, larger sample sizes, timing, using year-end testing primarily instead of interim testing, because in that situation the service auditor had not gone further and tested the operating effectiveness. What we would probably be happy to obtain is a type 2 report from the service auditor, and in that case the service auditor has tested the operating effectiveness of the controls. We have that report from the service auditor as the user auditor. We put that in our work papers, and we could use that then to justify a assessment of the risk and material misstatement that's less than the maximum, and then we could alter the timing, extent, and nature of our substantive procedures using what? Using interim testing more now, using smaller sample sizes, and for our substantive testing, and using internal evidence more instead of external evidence. So So this type 2 report is much more useful to us. And again, I'm not speaking specifically about to ADP. I don't know what type of report they get. If I had to speculate, I would guess they probably get a type 2 report because of the volume of the transactions that they're involved in. But there's no legal requirement there. But I would think they'd probably want a type 2 report to help their clients' auditors along. Okay, so let's take a look. Two type 2 reports by the service organization auditor typically results in what? Assessing whether the controls are suitably designed and operate effectively. Again, that design, implementation, step 1, testing operating effectiveness in step 2. You see that whole little set of words there that we have on that one slide keeps coming up again and again as something that we need to understand. In step 1, design, implementation, make an assessment of risk and material misstatement. Step 2, if you assess the risk and material misstatement less than the maximum, test the operating effectiveness of those controls. Key phrases there. Okay, good. Now, let's talk about communication of weaknesses. And we have two types of weaknesses. We have material weakness, which is the worst situation. Okay. And then we also have significant deficiency, which is bad. Okay. Now, what happens? When we talk about a material weakness, we say that there is a reasonable possibility, okay, that there will be a material misstatement in the financial statement. So when we're looking at this, we're looking at probability. It says probability, believe it or not. And we're talking about magnitude. Okay? So when we find a weakness in the internal control, we need to assess probability that it will result in a what? In a misstatement that has a magnitude that is material. Remember, we say that material misstatement is one that would change the judgment of a user of the financial statements. When we say reasonable possibility, we're starting to talk about 50% or more. In other words, we're saying when we talk about a material weakness, if we find one, we're saying that there's a deficiency in the internal control that is sooner or later going to result in a material misstatement. It's only a matter of time. Well, that's pretty bad. That's a material weakness. That is something that really should be corrected by the client. And so the auditing standards require that the auditor report that to senior management and those charged with governance. We need to report that when we find those. Okay, so there isn't always a requirement to report on internal control, but if we find a material weakness, we certainly have a responsibility to report that to management and those charged with governance. And under the auditing standards, under SAS, they give us a 60-day window outside of the date of the financial statements to be able to report that. I shouldn't say outside the date of the financial statements, out the date of our audit report. So we issue our audit report on the financial statements, say in February. We have 60 days to report these material weaknesses. Now, we also have to report significant deficiency, which isn't as bad as a material weakness, but it still warrants management and those charged with governance attention. Okay, so if you notice, the definition of significant deficiency depends on your understanding of material weakness. I always like to tell my students that significant deficiency is like material weakness is little brother, right? And if they don't call it by name or they don't describe it by name, they describe it by, aren't you material weakness is little brother? Okay, so if you understand what a material weakness is, significant deficiency is not quite as bad, but still under the auditing standards must be reported to management and those charged with governance. And again, for both these, material weakness and significant deficiency, they give us a 60-day window outside the date of the financial statements to report that. Okay, not the financial statements, 60 days after our audit report to report that. Okay, and they give us some examples of some things that would be a significant deficiency versus material weaknesses, and they talk about those different types of deficiencies, not versus, but the types of things that could potentially warrant a significant deficiency. Material weakness has a lot to do with auditor judgment. Okay, let's talk about controls in an IT environment, and we have basically two types. We have general controls versus application controls. Okay, general controls are at a higher level, okay, and they involve things like use of password, disaster recovery issues, system-wide type issues. Application controls are specific to an application, say payroll. No payroll check more than $10,000 should be processed, right? And we don't want somebody to get access to our payroll, which is much broader and more opportunity, a lot of employees there. We know what the maximum amount of payroll should be for a payroll period, so we set a limit there over our payroll. And that would be an example of an application control. Now, the application controls rely on the general controls. So if you have a client that has poor general controls, you do some penetration testing, and you may use an IT specialist. Remember, we talked about the use of specialists. You may use an IT specialist to come in and look at those general controls. And if that's the case, you use those. You look at those general controls, and if they can be penetrated, if there's you do the penetration testing, and someone can get through and crack the system through the passwords, then we really aren't concerned as much about the application controls, because now someone can get in and change whatever they need to on those application controls. So we first worry about the general controls. Application controls rely on the general controls. I was on an engagement where we looked at issues related to processing of the IRS tax data that goes to lock boxes that process all that information. And one of the general control issues we raised there is they had their main and their backup on the same power grid, and our issue was one event would take out both the main and the backup. That's a general control type issue. Again, application controls are going to be specific to the one particular application, like payroll, etc. Okay, general controls, application controls. You've got to have good general controls. And you could see examples, some ADP, IT type controls, for example. Limit test was something that I was describing there. We don't want a paycheck to exceed a predetermined value. Check digit figure. Okay, if we're entering information, it's supposed to be a payroll transaction. The first digit should always be 8 or something like that. So these are examples of common validation controls. Okay, so an auditor anticipates assessing control risk at a low level in an IT environment. Under these circumstances, which of the controls would the auditor initially focus? General controls, right? You have to have good general controls, otherwise the application controls can't be effective. Okay, again, if someone can hack our system, which is a general control issue, then the application controls are not going to be as effective, so we don't worry about those as much. I shouldn't say we don't worry about them as much. We worry about them as much, but first the general controls have to be reliable before you can worry about application controls. Okay, where computer processes is used in an accounting application, internal controls activities may define as classifying control activities in two types, general and application, and we've seen that. Okay, and then a limit test is a test to ensure the numerical value does not exceed a predetermined amount, $10,000 on a payroll check, for example. Okay, well, that's the end of Chapter 6, looking at the internal control. And I think we've seen that this is very, very similar to some things that we've talked about already, but got a little bit more in details to the nature of some of these tested controls. So what we're going to do now is we're going to go to Chapter 7, and we're going to take a good look at our Chapter 8 and 9. We'll get to 7 later when we talk about internal control reporting along with our report on our audit report toward the end of the class. We're going to go to chapters 8 and 9 now. And for chapter 8 and 9, we're going to start to take a look at how we'll use audit sampling, both for our control testing and for our substantive testing. And we're going to see that much of what we're going to have to get down is some key definitions. Don't worry, we're not going to be doing complex statistical sampling calculations. We're going to be more understanding how some of the key terms used there. An auditor has to understand those and see how those will affect our decisions and our conclusions on our audits. Okay, so we'll see you a little bit later. Make sure you're getting into the Connect to do the homework, guys. I know we did some of the slides, some of the questions embedded in the slides here, but do make sure you get to the homework there. I think you saw for the first midterm that the midterm questions, again, are going to be very similar to what you're seeing in the homework and the quiz questions. Okay? All right, we'll see you a little later.